Hey guys, for those who don't know me, my name is John. I'm a crypto trader here on YouTube. And today I want to talk about something I wanted to discuss that can help put things into perspective for some people. Into understanding why this dump happened and why I think it was necessary for us to push to higher highs. You got to understand that markets just don't move in a straight line. This is a straight line. I don't. You can call these pullbacks a trend, but this. That's not a pullback. This is a pullback. This is a pullback. So I want to sit here and explain what I'm thinking is going to happen, and hopefully, it'll help you get a better understanding of where things can go. In my opinion, I'm going to approach this from two different perspectives. I'm going to approach this from a strategy that I use, which is a modified version of Elliott wave theory. For those who don't know who Elliott wave is, it's a long story, and I could sit here and make a whole 2-hour video about it. Um, there's plenty of good resources online. I recommend you do check it out if you do want to take your trading to a next level. I personally use a different version of it. So, in traditional Elliott wave, the market's moving up in a 5-wave structure, and it comes down in a 3-wave structure, and then it'll either do another 5-wave move, and etc. It'll create a bigger trend. All right, that's the simplest way to explain that. There's a whole bunch of rules, different patterns that I can go into, but we're not going to go into that today. What I want to explain and what I want to show you guys is based off of my version of evaluating the way I trade. The market moves in pairs of threes for some reason. I can't explain why. It's just how it is. And I've been surprised over the last couple months that I've been doing this to see how much opportunity there was back when everything was pumping or everything was dumping, how much money could have been made. And so I really focused on changing my strategy to adapt to this strategy more. Basically, all this version of evaluative is that markets move in threes. 1, 2, 3, or ABC, ABC, and yeah, and etc. So, from a technical standpoint, I need to figure out where the first major trend is. All right, in my opinion, it ended here at the second retest of 28,600. On Bybit, it got a double bottom, but on Coinbase and Bitstamp, it did get a slightly lower low, which is all I need. And this most recent move is a B, which is a retracement trend. And finally, I'm looking for either a higher low or at least a double bottom, if not a lower low, below the $28,000 mark. So, within these trends, there are 3 trends, or a series of 3 trends. For example, there is an A, B, C here, which would make an A. Then I would say an A, B, C, B, and then an A, B, C, C. So these 3 trends connect to make one singular trend. Now, in this instance, this was a short A, a longer B, and an extended C. Now, there's going to be people who trade LA who are going to be screaming at me. Yes, I understand that this C wave is very extended. It's not technically a C wave. It could be WXY. I don't care. It's the same to me. I don't trade by those same rules or principles as traditional LA wave theory, so I'm not going to use that. I'm just going to use the simple ABC structure that I use. So now that we know that this is a C wave, this trend right here, we need to break this down. before we break this down, you need to understand where the targets for the retracements are going to be. So, with this theory and this strategy that I use, you have downtrend, uptrend, downtrend to put in a lower low. You're going to, that wave technically wants to retrace to the 0.5 and the 0.382 area, anywhere in between. That is a line. I need a box. Okay. And within this retracement, there's going to be an A, a B, and a C. And then there's going to be another extension. And that will create one whole trend. All right, that is the simple version. So using those same principles, if this is my first downtrend, I need to figure out where price wanted to go to. And would you look at that? Anywhere between the 0.5 to 0.382 region. Okay, this was my area to start selling, and I did DCA. I was able to pick up a little bit on my spot positions here, but nothing significant at all. Maybe like 5% of my portfolio. So as we were continuing to climb, every time we put in a higher high, or at least retested the previous, I DCA'd out. Once we got past, I think it was 50, yeah, it was about 50K. I started being more confident, but once we pushed past it, I started second guessing myself for a moment. And for a while, I kind of thought that I missed out on the bottom. And it could still be the case. But for now, I'm sticking to my guns, and I think that this is going to be a larger trend to the downside. So you're probably going to have something like an A here, B here, a C here, then another A, B, C to pull back, and then a continuation to the further target. This is just a basic drawing. Right now we are working on the bigger A. So depending on where price ends up and where that wave wants to end, I can figure out what the next step is. So that is the perspective of the way I trade using Elliott wave theory, or the modified version of it. What I want to do next is show you something that I'm not sure if anyone has showed, or if few have shown. And people like to pull fractals off of different points of time, but I think this is the most accurate representation of what's been going on and what's going to happen. So in order for me to do that, I have to go back to the Coinbase chart and go back to, let's see, 14K. Okay. So back in 2018, when Bitcoin did hit its $3,000 area, there was a massive rally. You would call this a bull run. This is a bull run. So within this bull run, there is a retracement. Okay. So I'm seeing this as one bigger downtrend. Nope. One bigger downtrend, a wick up to retrace, and a lower low. Okay, so that is going to be one massive trend. Something like this. Now, in order to figure out where price wanted to go, you have to pull the fibs from the top to the bottom of that trend. And I usually target between the 0.5 and the 0.382. Would you look at that? That would have been an ideal exit position for a retracement or a trade, just in my opinion. But you notice something that happened back here, that after this ended, we started this current bull run, or the most recent bull run. You had a straight shot pullback. This wave setup here wasn't the healthiest, in my opinion, to look for in a bullish setup or a bullish case scenario. This looked like a pullback, and within this pullback, when you zoom in, what do you see? Well, I see an A, B, C. Within that C wave, there's going to be an A, B, C. So that's an A, B, C. And would you look at that? Price did kind of squeeze out, consolidate into almost a rising wedge. It's not the cleanest wedge, but it's more like a channel, and ended up breaking out. And then continued to, lead up to the coronavirus dump. So in total, you had a gigantic downtrend, a bigger pullback, and then a longer continuation. Now, I'm not saying that price is going to sit here and retrace 61% from that reversal point. So if we go back to where we are now, I'm just curious to see 61%. Yeah, I don't see that happening. But you never know. Down to 20K. That's a retest of the previous all-time high. Me personally, what I'm looking for is a test or a slight push lower than this original downtrend. As soon as price gets back above the 29K mark, I'm buying, and I'm buying a lot. Not telling you what to do, just as what I'm doing. And once price can come back up and rally, then we can go back to the same point in time again. Look what happened. I don't have to really say anything else. That's a bull run. I can't sit here and give you targets for what the next area or the next new highs are going to be. Could be anywhere from 100K. Everyone's expecting 100K. I think 100K is a reasonable number. But you have to have these structures play out. The market has to move in a particular way. You can't have straight shots up, just like you can't have parabolic moves down. It just doesn't work like that. Trends have to create themselves, and that takes time. So, if this is the top, this is probably going to play out similar to what happened in coronavirus. Kind of have a retracement, and then slowly awakens. Might have one push down, and this might just spiral. I can't sit here and give you an exact, but this is what I'm looking for. So guys, just be careful. If you want to be bullish, buy the local lows, buy the dips, buy in 37K, buy some at 44K. Me personally, I'm not touching this thing until she gets back down to 29, maybe 37. If this is a bigger A, B, C. So yeah, that's my thoughts, and I like to see how this is going to play out. I'm in a short position. I am short, and I continue to be short until I am proven otherwise. All right, guys, I'm going to wrap it up for today. Be good, be safe, don't FOMO, long or short. Until next time, I'll see you guys later.